Alright, fellas. So earlier today, today's Friday the 12th. I'm recording this at like 3 p.m. So the market has closed, and we know that earlier today, SpaceX launched, did their IPO. It was today, and their strike price, their stock price started at 135, and right now I think it closed around 160ish. So the huge jump at the $30 a share from in the span of less than a couple of hours, right? And today's just the first day. Today's first day one for them. But what did that mean for us as an investor, right? So I invest in QQQ. The equivalents are VUG for Vanguards, and I mean there are other technology-based stocks that invest into these tech companies, and SpaceX being one of them. And here's the thing. So I'm gonna talk about the QQQ and QQQM ETFs, and how it'll impact those who have money invested into those ETFs, and how this can potentially impact the other related ETFs. In short, we know SpaceX valuation is very high; it's in the trillions, and it is big enough, large enough for the Nasdaq 100 index. SpaceX's valuation is large enough for the Nasdaq 100 to justify getting them into that index. And what does that mean? Essentially, what that means is that when Nasdaq starts to include SpaceX in the index, that will force the Nasdaq ETFs that track it to also buy SpaceX shares. And here's the issue, right? And this is the reason why people are calling it a money transfer. The reason why people are calling it money transfer is because SpaceX is huge. SpaceX is going to break into these ETFs, and once they do that, the ETFs will be forced to buy SpaceX shares. And as I just said right now, it is Friday. They did the first IPO. They closed with $30 plus in their favor. So as the stocks get more expensive, the worse it would be, or the pricier it would be for the Nasdaq 100 tracking ETFs to purchase the stock. And that's the idea that I'm trying to share with you guys. The reason why they're calling it a wealth transfer is because it's gonna force ETFs that track tech to force buy SpaceX shares, and that's the issue that people are trying to wrap their head around, because we have a lot of people's money, whether it be in 401ks, pension funds, or personal retail investors. They have money invested into the S&P 500. They have money invested into the Nasdaq 100 and other similar ETFs, and some of those ETFs have strict criteria where they will be forced to buy SpaceX shares when it comes through. And I'm reiterating this idea that they're going to be forced to buy, because it's basically how the index controls itself, how it manages itself. And it's a wealth transfer because the money that we put into these ETFs, some of it will be tossed into SpaceX shares, and even new money that goes into the Nasdaq 100 ETFs, new money will be used to purchase SpaceX shares when SpaceX has justified itself to the Nasdaq 100 tracking ETFs to pretty much be a part of the index. And that's the issue, and that's the reason why people are calling this the huge money transfer that we will see in a lifetime. And here is the issue that's important to us. One, it's already important because if we're invested into Nasdaq 100 tracking ETFs, then we're going to be eventually screwed if SpaceX joins the Nasdaq 100 and eventually the S&P 500. The bigger issue is that how can we take advantage of this situation? How can we use the SpaceX IPO launch to our favor? And so my first point is, I've seen on average the stock value of the company that IPO'd is on average low. By how many? By how much a share? I'm not sure, but it is low. So the behavior is simple. Everybody's all hyped. Everybody's going to purchase. So when people purchase, naturally the stock is going to increase. When their stock increases, and then those insider shareholders that have held the stock for a long time, they would be free from the restriction of selling on launch date. And I think it expands into a month or two into the future after launch date. And those who have a lot of money tied into shares, they would be able to sell when at the end of the hype. And at the end of the hype would be when the price is at its all-time high, most expensive, and it'll be the best way for them to pretty much get rid of the shares and earn hundreds of thousands. So that also ties into what I was talking about earlier about wealth transfer. If a person has 100 shares, they bought at $100 and they sell it when it's at 200. They had easily just double their money, to double their investment over the course of perhaps a couple of months. And that's the issue that people are worried about. And here's the second point that I want to talk about. If these shareholders have all of this money upon selling, then that also means that the market will also take a bit of a tank. Not the entire market, because one company isn't the entire market, but ETFs that have a heavy involvement into tech will take a nosedive. And why? Because people are literally taking money out of the market, and because people are taking money out of the market, there won't be enough liquidity for those that have continued to hold the bag. In other words, if the person is going to sell at 200, then of course obviously there has to be a buyer for those $200 shares, and if there isn't, then naturally the price is going to go low, up to the point where it affects the stock price, and it'll go low because people don't want to pay 200. They're willing to pay 190 or 195, but it's definitely going to be lower than 200. And that's my point, right? Eventually you're going to sell enough shares where there aren't going to be enough buyers for that stock at, let's say, at 200. And there will be buyers who are willing to buy at 100, even less, right? And of course, as people sell and take money out of the market or out of the stock, out of the stock's liquidity, the less money each stock would be worth. And so that's interesting to look at. It's pretty straightforward when it comes to like understanding how money is transferred from one side to the other, just because the IPO is very, very large. And how can you and I take advantage of this situation? If you want to sell covered calls, I think that's a good way to do it indirectly out of the SpaceX IPO. We know that SpaceX is just new, so retailers won't have enough shares to do covered calls, but you can do it indirectly because we know that people are selling their current shares from other markets to pour money into something else. And so selling all the shares that they've had for a while is a good opportunity for those who know how to do cover calls to earn some quick cash. I know the income generating ETF JEPI, which is JP Morgan's premium income equity fund that's available to the market right now. That's basically what they do, right? They hold actual assets that produce dividends, and they also sell cover calls. And all of this is a way for the fund to generate money, and that's how investors in the ETF JEPI make their money a month. Yes, it's a month. Apparently, it's not at a quarterly basis how most dividends ETFs are, but that's a different story. And say you're very worried about how the IPO of SpaceX is going to affect your current investing. Maybe you don't want it. Maybe you're hesitating from putting money into the S&P, into QQQ, and you're looking for a defensive stock or stocks that help you mitigate the issue that's happening right now. I've seen CASHD kind of take off. It's growing by a lot if you had purchased a lot of shares back in November time, but nonetheless it is still growing. It's been behaving a bit independently of what's going on in tech. You've seen last week that a lot of people sold their shares, showed that the tech stocks and sold other things that impacted the market negatively. Vanguard's version of the S&P 500 went from near 700, and I think it bellowed a couple of days ago at 680. And so that $20 a share difference might not be a lot for those who don't have enough invested, but for those that have like over 30 shares plus, and at minimum that would be a 20 times 30 change of difference, right? And so that's it's important, right? So the point is, if you have enough money to buy a certain stocks that help you ride the wave and not necessarily be too impacted by the SpaceX IPO, you can invest in Coca-Cola. I've seen that its stock price is near 80, which normally hovered around 60 to 70 last year. I've seen CHHD be a good option for those who wants to invest in that. Of course, within SCHD, there's a bunch of markets. There's a bunch of stocks that you can invest into that are considered a dividend producing stocks, and if you choose wisely, then you are able to choose a for sure type of stock, right? Instead of just betting on the market or betting on tech. And so I'm going to end this conversation by mentioning what I'm doing with my own money when it comes to whatever is going on right now. I see an opportunity, but I see an opportunity buying the dip. Even though it's not much for the dip is, 2020, the other difference for Vanguard's version of the S&P 500 isn't a lot. Nonetheless, it still beats buying an entire share at 700 when I could buy 680. So I've been dollar cost averaging into the S&P 500 for about 5 years now, and I haven't seen red in a while. And by a while, I mean I think the closest that I've seen to seeing red was when the tariffs hit last year in April. But at the same time, it's like, as long as you keep at it, you buy when it's high, and you also have to buy when it's low, because that's the point of dollar cost averaging. So that's essentially what I'm doing. Am I doing something directly to take advantage of SpaceX IPO? Not really. I could, in theory, buy a share or two and see how it performs, but I'm more interested in the other tech companies that aren't trying to ride the NASDAQ and have a proven track record of generating money and keeping this business afloat. The one thing that one stock that comes to mind is ServiceTitan and ServiceNow. For those who are interested in looking into that, simply what I do when it comes to looking at stocks is their stock behavior over the course of a year to 5 years, and see how it behaves. Is it all-time low? Is like what is the cyclical behavior of the stock? And of course, on top of that, I want to know its business model. Is it recession proof? How sensitive are its customers to its price? How integrated customers are into certain services that companies provide, because that's also really important when it comes to renewing contracts and continuing to be a customer for a customer for a company. So these are things that you need to be cognizant of when it comes to evaluating stock. Well, another stock that comes to mind is Home Depot. I think they were at 350. I think a couple of months ago, maybe even a year ago, they've been getting marked because of the market. Right now, I think they're closer to like 280. I haven't seen it in a while, but because it's low and we know what Home Depot is all about and how consistent they've been throughout years. They've been around forever, so it's natural that they'll continue to be around, especially regarding the complex that they sell and the people that they appeal to. So I don't see Home Depot going anywhere. Another one that comes to mind is AutoZone, right? AutoZone stock for some reason hit 4K. I think like a year ago is when it hit 4K, and right now the stock is at 3K and a half. AutoZone is not going to go around. It's not going to be around. It will be around for a while. It's been around for a couple of decades now. I don't see it going anywhere. People still go to AutoZone. I've seen a lot of people go to AutoZone to buy the thing, whatever they need, and I still see them opening up shops throughout the cities. So that market will always be around. It's really interesting how they will fare up against new vehicles that that have their parts. I guess what I'm trying to say here is that companies have made it difficult for the white hires to do their own thing by themselves. So it's interesting to see how they're going to fare up against that decision that car makers are doing now. The good thing, however, is there's a lot of older vehicles on the market right now. Right, so like mine, for example, it's from the 2000s. Of course, I'm still buying parts for it to this day. I installed something new on the vehicle because it needed it, it wanted it. So like, I have to go to AutoZone to buy the stuff.
50
And
attackers
to be honest,
remaining.
I don't really buy from AutoZone as much as much as I used to. I go for like typical like oil and like oil filter and whatever.
Приказы?
And then you could go to Walmart, you could buy some things or some things off of Rock Auto and other parts too. So what I do specifically is I go to Rock Auto, I source the parts, and then I buy the exact same part and ensure that it has the same part number from Amazon because I know I can return the part as easy as Amazon makes it out to be, and it's free shipping too. I know we know Rock Auto charges for shipping. But anyways, I think I'm on a bit of a detour. That's how I evaluate stock. So, like, what's the business model? How tough is it when times are low? What is the customer? Like, what is the customers? Like, how well are they integrated into the company's environment, right? So, a good example with the AutoZone is they have to go buy auto parts. Of course, we have local auto parts shop. We have competitors like O'Reilly, etc. that they're gonna have to, be up against from time to time. And also we have a ServiceNow, right? ServiceNow, I've seen them provide software services to major companies, and so those contracts will have to be reviewed depending on how well integrated the business is the software. And so that's guaranteed recurring revenue, but you're gonna have to stress test it too when things go south. Anyways, fellas, I think I'm rambling on too much. I think I already mentioned what I do during the SpaceX IPO and why people are calling it a wealth transfer. And the last part of the video was me talking about what I do when it comes to evaluating stocks. I don't go too in depth, but I also don't invest blindly. I always invest in something that I have a good understanding, and I also have the hope for the best. I invest money I don't need, so because I don't need it, if it goes low, then the bother me. When it goes high, I'm like, cool. So that's the kind of mentality I have when it comes to investing. Alright, fellas.
Осторожно, штурмовик!